Hello everyone, let's have a look at what's happening in the Indian market, US market, and globally. If we look at the participation in Indian market, I'm majorly covering the Nifty 500 index. That is what is the most suitable. The advances have been close to 200 and the declines are close to 280 odd. So the breadth is pretty much mixed, I would say. If I look at the leadership, that is how many new highs are being formed in the market versus the new lows. If you look at it, it is very poor. Hardly, I guess it is less than 10 new highs and almost 480 490 of new lows. That really shows nothing is making new all-time high or new highs in the market. If I look at the breadth, the overall breadth, the number of stocks which are trading above 20 DMA are close to 200. Above 50 DMA would be again around 270 to 80 odd. Above 200 DMA, that's a good figure, and that really gives confidence in the market, and that would be close to 230 to 40, I would say. So if I look at the overall trend, I would say for Nifty 50 it is still bearish. It is trading below 50. The participation has been neutral, as we already saw, and the breadth is pretty much mixed. And if I look at Nifty 500, pretty much same story. It is trailing below 50 MA. The participation is mixed and the breadth is mixed too. Coming to the US market, again they have been roaring, and I'm tracking the S&P 500 index. If you look at the advances declines, they are pretty much similar, close to 250 odd in both the cases. But the interesting thing is here also, if you see, there are no new highs forming in the market. So that ways the breadth in the market, which, like, although US market is touching new all-time highs every day, but somehow the breadth is not supporting it. If you look at it, there are not many stocks making all-time high new highs. That basically means there are few chunks which are moving the market, which is not a very good or favorable news. Number wise, again 480 odd, 490 odd new lows against 1020 of new highs. The breadth, uh, again a very good figure, 250 270 odd above 20 DMA, around same figures for 50 MA, and above 200. No, like, this is like, if you have close to 280 300 figures, I won't say it is bad, but then yeah, that's again a mixed kind of a feeling from the US breadth market as well. The trend, if we look at Nasdaq, it has been bullish. The participation is mixed, which I said earlier also. There are few chunks which are moving the market. The breadth is very mixed. Same is the case with S&P 500. It is above 50 MA. The participation is neutral. The breadth is mixed. Same story. Few stocks are moving the market. Russell 2000, pretty much same. So basically, the US market is moving in patches. There are strengths in certain pockets which are moving the market, which on overall is not a very positive news. So there might be, predicting would be wrong, but like, we need to be cautious about it. That is what I would say. If I look at the macro dashboard, the US 10-year yield has been rising. It is above 4.5%. The liquidity is headwind. Dollar is again, formed its base above 50. It is flattish, so not much there. VIX gives us a good signal that it's a risk on environment. It has been trading below 20. BTC, you might have seen the kind of fall it has given. It is bearish. It is already reached below 50 MA. Mixed signals, like, it formed a very good rally around 54 55,000 levels, and now, like, when people were anticipating it should go higher, it has fallen back. Gold again has become bearish, trading below 50 MA, defensive demand. So overall scoreboard, India remains a weak regime, US remains a very mixed regime, macro is also neutral, overall it is neutral. So what I would say is, uh, like for sure on selected equities we can, take our conservative bets, but then this is not an environment wherein we should be trading very aggressively, whichever market it is. The reason being, we looked at the Indian market, US market, the participation, the breadth are not supporting the rise. Like the Indian market has been down, so I'm not even comparing that. But then if I look at the US market, the breadth, the participation is not supporting to the highs the market is making. That means the strength is lying with certain pockets. So either if you are very good at identifying those pockets, you can definitely take your safe bets. But if you are not, I would say be cautious, wait for markets to improve, show strength, and thereby start planning your trades. That's all for today, guys. Thank you so much and have a good one.